Hi, welcome back to this mini video series where I built a financial model that hopefully enables you to understand the prospects of your investments and your overall financial situation better. Please watch the first video of this series and work your way up from there, where I started with a completely blank spreadsheet and have now gotten to the point where within a time series of investments with an equity only portfolio, and how we later added a minimal risk asset, since most people shouldn't just invest in equities. We then added the concept of risk to that portfolio. And in this video, we'll be adding the multiple scenarios so that we can see how that time series of investments might act in a whole range of potential outcomes. This is important because at the end of the time series, while we'll have one output number, we also need to understand that that number itself can vary a great deal. And that in turn will enable us to think more about the prospects of perhaps falling short of our financial goals. And that in turn will help us think about the risks that we perhaps should have taken to start with. There's a huge advantage in my view of these spreadsheets as opposed to expensive software packages, in that by building these spreadsheets alongside with me, you'll understand how the numbers fit together very well, and you'll be able to adapt the inputs to suit your circumstances, or even change the model itself so that it suits you better. My name is Lars Kroyer. I'm a former hedge fund manager who has written a couple of books about finance, and I'm now doing these videos as a hobby. I should say I'm not a financial advisor, and you should therefore do your own work or take your own advice before you do anything I say in this or any other video. But let's get back to the model.
So we're back at the spreadsheet, and like in all the previous ones, we start by copying the sheet. This is just again so we can start with each video is essentially a different sheet, so you can follow along with me. And in this video we're going to be adding scenarios. Adding scenarios. Okay, so let me start by doing a couple of things. First of all, I'm going to hide a bunch of these rows just so we can get some room, so we can see. So see hide. So now, and then just to signify that we got a different part of the sheet, I'm going to color this in some neat. How about green? There you go. Okay, so now we're going to do scenario analysis. And again, I want to keep emphasizing how we've gotten pretty far with this model with some very simple assumptions. Go back and check it out. Now, what you notice in cell E13 is one outcome of, in this case, 958,000. And we know that every time we run the model, we're going to spit out a different number, which is essentially saying that in the period that we looked at, the range of equity returns were vastly different, just like we'd expect in real life. We can change the assumptions if we want different inputs, but here they are. Now, this is just one number. This is essentially saying you got to live your life once, and it worked out at 958. But obviously, it's going to work out very, very differently, different times. So the way we do this is we can rerun this model a bunch of different times. And so the way we do that is with what's called data tables. And data tables essentially take a number and they and reruns the model with different outputs given different inputs. Hang on. So what we do is, let's take scenario real number, say 1, and let's equal 1 plus 1. And then what else did you do? The function. Yeah, so let's copy this down. That's the function. Let's do 1,000 times just to be particular. So you can do it X. You go up and copy this down. I hope you can follow along. Again, we need to do the recalculate. So 951 is quite enough. I'm sure there's a better way to do this, by the way, but but I think it's quite important that you can follow along with this video. So there you go. So now we have 1,000 cases, and then the number, let's go up to the top of the model here. So the number we wish to regenerate is this number. So we'll make it equal to the output number. And then we have to change an input number. So basically, this is essentially saying, what if an input had been a different number? Now, it doesn't actually matter so much because we have a random function. So let's make the standard deviation. Let's just copy it down. Copy the formula down, and then make it equal to this number, and then copy that down. So there you go. So that's gonna work. Copy the formula down. So now we can see they're all the same. And then what we do is we want to run a data table where we change that number. So that's the data. So it's up here, data table, and then the row, the column input cell is gonna be F9. So F9 is what we want to change. Okay, let's see if that works. There you go. So now you see that for each scenario we had a different output. So you can see, we should format those. So what we do that is we copy and we paste special and we paste the formats. So I think it's an easy way of doing it. So now they all look neat. So you can see there's a whole range of outcomes. So what we need to do here is we need to obviously say, well, we can't just sort of eyeball through 1,000. Let's do median, max, and min. So we do median, so that's our mean, that's average of all of these numbers. Boom. 641, which incidentally is that's a median. So this is the median case. Max. So essentially, if you did this 1,000 times, what's the best number you'd expect? Look at that, 3.6 million, and minimum is the minimum. So what we have here, 146. Just look at that. I mean, it always bothers me a great deal when people say, oh, you have an average expected return of 5%. So people sort of assume 5%. What this is telling you is, if you believe the inputs, the assumptions of this model, and you had 1,000 times you ran it, so it meant 1,000 different people that were independent of each other. The luckiest person would have 3.6 million, and the unluckiest would have 146,000. That's a crazy range. But let's get even better. Let's say, let's build further out, and we want to see how this works in different ranges, right? So let's say what's below a certain number, let's say 0, and what range do we want that to be? Let's say we want to increment it by a certain amount. Just to pick, again, I'm going to copy form. I'm going to be a real... this, by the way, is what happens when you work too long in investment banking. We were all damaged children from all the formatting, and then we do every increment. So we copy this out. So I'll show you what I'm trying to do. Recalculate. Let's say that's fine. So what we want to see is the case below or above? Let's get this one down. So let's say scenario 1. Is it below? Is it below 0? So if this number is below that number, then 0, otherwise 1. So did that the wrong way around. If it's above that, then 0, otherwise 1. So let's copy. C is gonna be this always C when we copy it out, and G is gonna be always row 72 when we copy that. So now what we see is the number, and this one you can see is 1.1 million. So it's below 1.2, but it's not below 1, right? So that's that gives us an idea of the range. So let's copy all of these down. And the reason I do the X is so it's easy to copy it down to. Now recalculate, and what you see is depending on different numbers, right? So now we can say how many numbers were cumulative. So we can do, what we simply do is the sum of all these numbers. So sum, there's not going to be any below 0. We hope we would have done something horribly wrong. Copy that out. And now, let's see, calculate. So what we see is here the cumulative, so what number of the cases, and let's just count the cases just to make sure that, that we've done it right. So that's equal to the count of all of these numbers. It should be 1,000, and it is, which is always nice when it works out. So essentially what this model is saying, if we ran this model 1,000 times, there would be 6 cases, and this is going to change with every recalculation, but now we're going to see it's going to change less. There would be 6 cases below 200,000, there would be 228 below 400,000, 544 below 600,000, and so forth. So what we could do is, well, what is that for each range? So let's say count in range, for example. In range. So what that is going to be this number less the number before. And then recalculate. Actually, let's take it one more out. So there's also the above number. Oh, sorry, that didn't work, did it? So this is going to be, the final number is going to be the 1,000, the total number minus this number, right? So basically, and then let's do this neatly formatted. I'm just going to move these out so there's a little room. So this is going to be equal the text of this number divided by 1,000, and that we want to format like that. Just follow along here, and then K for 1,000. So that should be in. No, it's an N sign, and K2. This number, shit, so 0K, and it should not be 71, it should be 72. It's not going to make, and then 2, the text in this number divided by 1,000. And again the formatting, and K. Let's see if that worked. Text. Oh, so it should be an and sign in there. Oops. And sign in there. There you go. So now, what we're doing this neatly is, you can see we're saying between the ranges of 0 and 200,000, and copy that out, and we will have between the ranges of 200 to 400, 400 to 600. This is the count we get in that range, and then in the last one we should simply say above the last number. So let's copy that out. Text above. We can delete all of that. M72. Oh, I forgot the. There you go, above 1,200. So now this is getting interesting, right? So now what we have is maybe what we do is we do a little chart, although I must forewarn that this is one of my many weaknesses, is let's make a bit of room. So let's chart. Let's say insert a chart. Maybe let's do a bar chart, and let's have select data. So this will be this, and do OK. There you go. Let's chart title. So I should probably change the XY axis, but never mind that. Outcomes of scenarios. So, oops. How do you change that? There you go. So what you're seeing here is a graphical illustration that if we ran this 1,000 times, I guess we could do it as percentages. This gives you an idea of where in the range these things would be. Let's do it another way. We can do the same number. Just I want to give you an idea of the flexibility of the model. Let's say I'm thinking, well, this is all very good, but I want to just know. I want to know what it is in my case. Like I have a specific scenario. I want to, let's say the sum. I want to worry, in my case, I want to worry how many times does it get below 400,000. So first of all, let me make that blue just to be annoying again. So 400,000, and that's the formula. I really calculate now. Oh, I did a 0 too many, didn't I? So they're all below 4 million, and then recalculate. So now, here, this is interesting, right? So there's shortfall. Let's make this neat. Let's say number of shortfall and percentage shortfall. I could probably move this out one, but so this is this divided by 1,000. So this is basically answering the question, if you believed all these assumptions, everything I've done in this model, and you reran the case 1,000 times, you said, how often would I, with all these assumptions, fall short of 400,000? I can make it, and the answer is just under 22%. In the next video, I'll get into why this is actually hugely important, because you can also think about, have this be a guide to make you think about risk. So let's say that instead of this, you said, well, if I only, let's say, had 75%, so only had 25% in equities, I would run out fewer cases. Why is that? Well, because equities are more risky. So while I might end up with an average higher number, the higher my equity allocation, the worst cases are lower. The next video, this will be super important because we can see how this will help us with our allocations and compare when we think about our allocations in the context of how much money we'll eventually need and how we can react or think about the consequences of scenarios where we fall short, which I think is hugely important.
So thanks for watching. I hope that was interesting and useful. You can subscribe to my channel if you want to hear about future videos, or share this video on social media if you think your friends would benefit from watching it. But in any case, I hope to see you in the next video.